Hey traders, a weekend update here on net gas, gold, silver and crude oil, and I'm also going to go through palladium today. So before that, as always, over the weekend I'm going to show you something really valuable for you that will help you to understand trading in more efficient manner. I'm going to show you this week I've sent indices report as well, the first ever indices report I've just started for members that is included in your membership without any extra cost, and I'm going to show you how the trades reacted out of the indices zones nicely, and also the most important thing is how to manage your trades when the price hit the major area of value and what to avoid. I'm also going to go through few trades we took in the priority group, the losing trades winners, and how we entered the trade from the zones and in between the zones. So it's going to be really beneficial for you if you want to watch this part of the video. Otherwise you can skip it to the timestamp in the comment section. Also, I have new partner broker just recently joined, which is IronFX, and as you can see, they are regulated. They've been in the market for more than 10 to 15 years, and if you see, the rating is AAA, and as you can see right here, everything is great. They are also regulated with the multiple licenses including FCA. I've already opened my account right here. I'm going to deposit after the weekend, and I've already got a good feedbacks from the clients who have already deposited in the IronFX, and it only took 5 minutes to verify the documents and even few minutes to deposit the amount. They also got multiple methods if you want to deposit using this broker. As you can see, they got lots of methods if you want to join them. So take a look, and with that you will also be added in my priority group for free as long as you are trading with my partner broker, and you will get all the benefits of standard plan for free if you join IronFX or one of my partner broker. So with that being said, let's start with our indices report I have sent to the members. Also in today's video, I'm going to show you the importance of keeping your stop loss and how to manage your trades. And we have a very good example on net gas where we had a nice pattern and price quickly fallen back down. So this is what I'm going to show you in this video so that you can avoid these type of mistake and trade efficiently once you see these type of entry confirmations. Right here, what do we have? I've sent this report to the members. The first one we have UK 100. Right here, as you can see, I have already informed my members that price is now inside the major area of value, inside the major support area, and this is the area from where I'm expecting a very good bounce. I've sent this report last week to the members, and the price was in the area of value, and I've already mentioned that I will enter the trade on smaller time frames with one of the entry conditions like double bottoms or bullish engulfing pattern. And what do we have right here? A nice double bottom. Instead we got triple bottom pattern, and how nicely the price pushed up from this double bottom, nice engulfer, and a nice push up from here. This type of entry, I keep my stop loss below the wicks, take profit wherever you want to take it. A good example of entering through counter trading zone. Now the mistake traders do, they don't cut their profits or they don't cut the loss. Once you enter this type of trade right here, once you take profit, one is hit, you can either just push your stop loss to break even and manage it further 180R so that if the market pushes down, it will stop you out in a break even, or you can get a maximum amount of profits like this and keep on securing your profit by pushing your stop loss ahead. So that is how you manage your trades when the price hit the counter trading zone. Now a very important point here, why we have these counter trading zones. These are the zones we pay attention to take our counter trades, just a pullback that is enough to hit our targets if we do not see any type of reversal. Now what happened is, sometime when the price is pushing down in a nice downtrend, a good example of a nice downtrend here, if you see the price started to push down and then we had a double bottom action, price pushed up, that is enough to hit our target. Now either you manage your trades, take your profits. Once you take your profit, we are out. Now if you see here, the price again pushes down, broke below, is heading towards the next level of area of value. And if you see here, the price pushed down, nice bullish engulfer, pushed up, you must exit your trades, take your profit, and then what happened is price pushes down to the next level of major support. So that is how the price action works. When the price hit the area of value in a downtrend, it keep on give you a bounce. Sometimes it doesn't give a bounce, it just breaks below straight away. But these are the moves we need to capture when the price is pushing down in a trend and heading towards the major level of support in a downtrend. And sometimes what happens is price push down, give you a bounce, and then quickly fall, and that bounce can be enough to hit your target. And what traders do, they don't set they take profits. And what happens? The price hit the take profit and then the price quickly falls. So they are in the profit till here, and then what happens if the price quickly fall? The goal is to grab these profits before the price push down and head towards the next level of support. Now, how we calculate the targets? We calculate the targets through the ATR. If you see the indicator right up there, and the way we enter the trades is once the price hit your area of value, enter at the close, and if you see the ATR is 28, your targets will be, initial targets will be 28 points. Now, if you see here, 28 is the ATR. ATR is the indicator that keeps you with the volatility of the market. And sometimes what traders do, they set a very tight stop loss, and in that case what happens is you don't give a room to price to give you a little pullback because you are not aligning with the volatility of the market. ATR keeps you with the volatility of the market. It look back the previous 14 candles, multiply that, and gives you a number which you see right here that tells you the volatility of the market. And if you keep your number less than the ATR, and then the chances will be the price hit your stop loss and then quickly push back up. So that is why very important you keep your stop loss according to the ATR, and then or you can keep your stop loss below the wick so that you avoid these type of mistakes in the future. Now we have a very good example of nat gas which I'm going to go through in a moment. So one ATR target has been hit, and then you can manage your trades accordingly with the price. So that is what I want to teach you. Always use ATR for your targets, add some number with the ATR according to you, and make sure you set your stop loss and take profit both. The next one I want to show you, Nasdaq 100. So as you can see, I've already mentioned to my members that price is pushing higher and now inside the major resistance, and this is the area that has been tested multiple times, and I'll be only looking to enter my sell trades with a conditions, and I've already said that I can also see a formation of nice double top pattern. So we already had a signal of double top on 1 hour time on daily time frame right here, and on 4 hour time frame we had a nice bearish engulfer as well. So that was my entry right here. And what is the ATR of the candle? I've just explained. ATR is 79 points and the targets has been hit more than 79. If you see here, 79 point target has been hit, and a very good example of not setting your take profit. Now imagine if you wouldn't have set your take profit, and that is a factor of greed. If you wouldn't have set your take profit and you just wonder that prices keep on falling down and makes you a millionaire, that is not a case. So in that case, what you can do, once the price hit your take profit, move your stop loss to break even, move further 1 ATR and grab some profits accordingly. And even if the price pushes down, it can put you out at a break even, or you can still get some profit. And imagine not having a stop loss will give you a lot of pain right here, and not having your take profit would take the money away in front of you that you would have got. So that is why very important lesson here. By keeping stop loss and take profit, manage as much as possible. The price is trending upwards or downwards nicely, then in that case I manage my trades. So Nasdaq was a second in the line I've sent to the members. The next one we have German 40. Now I've already sent these zones to the members to look for a sell condition, as the price was recently broken below the area of value, and if you get an entry condition here at this area of value, we're going to enter the trade. Now I personally enter engulfers, bearish engulfers on 4 hour time frame, but if I see a double top double bottom on 1 hour time frame, I still go for it. Now if you go back on 1 hour time frame, what do you see here? Do you see a nice formation of double top pattern? Price pushed up, pull back, pushed up, rejected from the rejection zones twice, and if you see this red candle is also a 382 candle. So everything is going with our analysis. We had a nice double top pattern on 1 hour time frame, and what is the ATR of this candle? 38.9. So stop loss will be 38.9, something like this, or you can go above the wick and 40. So as you can see, the price hit the take profit 40 points, but that is what the ATR is telling us, and that is what the ATR is telling, that price has this much volatility and price hit the take profit and quickly pushed back up. So all three indices gave us the reason to enter the trade, and by setting your stop loss and take profit, you see how important it is to have both if you want to manage it. We had a very good example on UK 100 where if you would have managed your trades over there, the profits will be insane. So that is what I wanted to show you. The first ever indices report I've sent to the members, and that worked out really nicely. Now I want to hit you with a reality check here as well. So what do we have? I want to show you a losing trade we had in the priority group. We had a nice analysis here. We had a nice double top pattern, a confirmation with a bearish engulfer, and the pattern happened at the area of value. Everything is going with the analysis. And what do we have? The price just broke above, hit our stop loss. So that is what we can get in trading. We can't get every single trade as a winner. We have a loser there as well. Our goal is to get a maximum profits out of the market so that our reward is greater than the risk we are taking in the financial market by having some set in stone rules, of course. So a good example of a loser here as well. We had 4 trades in the priority group, and out of that we had 2 winners and 2 losers, and of course we had some good winning trades in indices if you managed to enter those trades. Right here, a good example of a winning trade we took in the priority group. We entered at this bullish engulfer at the area of value, a major area of value where we entered this trade, and as you can see, price quickly hit the take profit and then it starts to give a pullback. And if you see a good example of a downtrend here, if you see the price is now pushing down in a trend, now it might reverse from here or it might just continue to push down in a trend. Now this pullback is enough to hit our target, and that is what we need to do in the market. We need to identify this area of values. We need to enter at the signal which you see a bullish engulfer, and once we had a signal we are good to go long or short, and then set your stop loss and take profit. Manage it accordingly. Now this trade can either reverse from here or it can either just push down and continue with the trend and head towards the next major level of support right here. So if you're managing this trade, then move your stop loss to break even and move your take profit further 1 ATR. So that is how we manage our trade. A good example of winning trade we had in the priority group. So rules are really important in trading. Without rules, without knowledge, trust me guys, you're just gambling in the market. And if you gamble with your hard-earned money, then trust me, you're gonna give up in trading really soon. And with that being said, I have a full mentorship program right here. If you see a premium plan where you will learn everything from basics to intermediate to advanced section and everything, and you also get a standard plan free for whole year. So you're going to learn trading from all the basics to the advanced level and your journey to become a successful and profitable trader. All the results there are proven, and all the pairs I've shown in the course has been tested, and I've optimized a best performing pair for my course students so that they can start back testing from those pairs and trading as well. So if you're interested, this is the premium plan, and make sure you watch this video first before you buy this so that you can see what to expect from this course, and you can also have an option to pay in 2 payments if you wish to. So with that being said, let's start our analysis starting with natural gas, gold, silver and crude oil. I'm going to also go through palladium as well. Right here, what do we have? Let me show you what I've said in my last video so that you can understand the entries and conditions. It would be awesome if the price hit this zone, the rejection area, which is 2.529 goes up to 2.545. If that happens, and then we get a green candle, bullish engulfer, or a pin bar 382 candle, in that case we have a very strong signal that price will bounce up from it. All I want to see a good signal to enter my buy trade, which can be a next red candle and then next green candle. If that happens, we have a possible double bottom confirmations, red, green, or hit of the rejection zone, pin bar, green candles, any bullish pressure, I will look to enter my buy trades. Awesome. So what do we have right here? So if you have seen the first part of the video, now you understand the concept of entering the trade from the area of value and the importance of having your stop loss and take profit. In the first part of the video, I've shown you how the price action reacts from the area of value when the price is pushing down in a trend, and the importance of keeping your stop loss and take profit. Now a very good example here, price is now pushing down nicely in a downtrend. If you see here, hit the area of value, bounced up. We had a sell signal here, price pushed down, hit the rejection area as mentioned. Now I was waiting for a buy signal, and what do we have? Right, and now if you're my full course student, you know all the rules of entering double bottoms. We had a signal of this candle here, and we had a bullish engulfer if you follow me here on the YouTube. Now if you remember the first part of the video, what did I say? I say that the ATR keeps you with the volatility of the market, and if you go against the ATR, the chances of the price hit your stop loss and then go back in that direction is likely, or hit your take profit and go down against your direction is very likely. Now what is the ATR of the entry candle? Right here is 3.8, and how much should be your stop loss and take profit? It should be exactly as the ATR, or you can keep it below rejection area. So let's do it 1 ATR, which is 3.8. Let's do 4. And what do we have? You entered at the close of this candle and price hit your take profit exactly more than 1 ATR and then quickly fall back down. Now if you do not have your take profit set here, that is a lot of loss if you don't have your stop loss set as well. Now if you moved your stop loss to break even, in this case, in this scenario, you will be out in break even with zero profits or zero loss. That would be a right move because you wanted to manage this trade in case the price reacted nicely from the double bottom pattern and it might have reversed. In that case, you would have better reward to risk ratio if you would have tried to manage this trade. But in this case, unfortunately, price would put you out in break even if you would have managed it, or that would be exact take profit hit. If you follow me from last couple of years, you know the way I enter my trade. If you are my core student, you know how we set up the stops and targets with the exact rules. Now what do we have right here? Now if you ask me, the price has broken below the zone, made a new low right here. That is correct. And I've also mentioned in my last video that if the price hit the zone on Oanda, the upper level, and if the price is still in between the zone here on capital.com, I'll still look for my buy trades. Now I don't want to confuse you here. I will still look for my buy conditions if I see a good reason to enter. Again, if the price hit the lower level, forms a bullish engulfer, a very nice bullish engulfer. I want to see something like this that covers the wick as well. If there is a reason to enter in this area of value, I will still go long and I will set 1 ATR target. Now looking at the fact price has just made a new low, if I don't get a bullish engulfer, no buy signal here, that is why I said I don't want to confuse you. In that case, what do we have? The price will just gives a breather, a normal pullback that can hit 20 EMA or that can hit 50 EMA. If that happens, no signal here, we had a pullback and it forms a bearish engulfer. In that case, we will have a very good sell signal because the price is now pushing down in a trend, broke below the previous low right here and still in the area of value. So that is how I enter my trade. If I see a signal like bullish engulfer first, I will enter my bullish trade first. If I see a no signal, I just see a pullback hit of 20 EMA or 50 EMA, or if it doesn't hit 50 or 20 EMA, just give me a reason like a pullback and nice bearish engulfer. In that case, I will still go short. So that is what I'm expecting from NetGas. Enter your trades accordingly. Price has just hit the area of value that has acted as a good level and pushed the price up massively from here. So that is what I want to see. If I see a good bullish engulfer here, that is a reason to enter for me here on Oanda. And if I see a pullback followed by bearish engulfer, I will still go short. Looking at the fact price has just made a new low with this candle. The zone below, in case you missed it, it is 2.342 goes up to 2.459 here on Oanda, and here on capital.com, the zone is 2.478 goes up to 2.561. So this is the zone you need to have on your charts and look for buy or sell condition. Price is now in the decision area, and the way we can enter the trade with a signal, price action talks with us. It tells us if it's gonna push up with a bullish pressure, if it's gonna push down with a bearish pressure. And if you say it is a valid bearish engulfer, it is a bearish engulfer, that's correct, but that is not one of my pullback entry conditions. It invalidates one of my rule. If you are my student, you know what rule I'm talking about. All 6 rules are not met with this candle. So I hope you got a concept of it. If you are still confused, DM me on Instagram. I try to get back to you as soon as possible. So keep an eye here. Price is now in the decision area. All we need to see a buy condition within this zone, sell condition wherever we get below 50 or 20 EMA. Next one, we have gold. Let me show you what I've said in my last video so that we can connect the dots from there. I still want to see a push up, something like this, a formation of double top pattern. If we have that, we are good to go. Short. Nice one. What do we have? Price hit the zone above, pullback. We had a rejection zone ready in case we have a pullback. We had a bearish pressure, which is red candle right here. We had a bearish engulfer right here. And the ATR of this candle is what? 3.2. The next candle ATR is 3.1. And what stop loss we need to have here? Yes, you guessed it right. It's 3.1. But if you have a double bottoms, double top, in that case, you can always keep your stop loss above the rejection zone just to have a protection. Or if you want to have 1 ATR, that should be fine as well. But I would say keep it above the rejection area. Go 1 to 1 or 1.4 to 1 risk to reward ratio. I went 1.4 to 1 right here. And as you can see, the target of $6 has been hit here on 1 hour time frame. So that is how we enter the trades in the financial market. That is how we can make money in the financial market, not just by seeing the price is really high, overbought, you start selling. you need to see a signal with the overbought situation as well, signal like double top patterns right here. We had a condition, we had a signal, we entered short. So price is now still in the area of value. We already had a take profit hit on 1 hour time frame. Now if you look at 4 hour time frame, what you can expect from here, we can expect two signals. I will give you the scenarios. Have the rejection zones here on 4 hour time frame. Now we can get a nice pullback again and a formation of double top here on 4 hour time frame. So that is what I'm expecting from gold. I will only buy gold if the price breaks above this previous high. If that happens, we have a confirmation that price wants to push up and continue to push up in a trend till the next level of resistance, which is 1976.95, from where I will see another sell trade. For now, I'm expecting a good pullback. We can get a pullback to 50 EMA as well, and a very good bounce from 50 EMA if the price breaks and close below 20 EMA. If close below 20 EMA, it will likely fall to 50 EMA and then give us a good bounce and formation of sell signal. Here again, looking at the fact the price is now in the major resistance, all we need to see a good sell signal with a pullback. We can get a pullback followed by bearish engulfer. We need to be very patient here. We might get a signal next week on Wednesday, maybe next week on Thursday, or maybe just before the market is closed. We can grab some good profit, but that is how the traders trade, with patience, with conditions only. So look for that. Once we have a condition, we are good to go short or long. Right here on silver. Silver has broken above the level of major support, and I'm only expecting a bullish moves out of silver, and that is not a valid condition in case you are wondering. So for silver, I'm only expecting a pullback to this area of value, possibly to 20 EMA or 50 EMA, then a continuation towards the upside. Now the zone that has been broken recently, it is 24.02 goes up to 24.60. That zone has been broken, and you can now set the zone as a level of support as the price has just broken above. So all I want to see a pullback followed by bullish engulfer. If you are aggressive trader, then you can just mark your fib tool like this, and your buy limit order will be 50% retracement if you're aggressive trader, and then you can go 180 or 1.618 retracement. The next zone where I will sell silver is 25.86 goes up to 26.39, from where I will look for my sell conditions like bearish engulfers or my double top entry confirmation. Pin bars is also one of my entry conditions. So bullish for silver, only expecting some good red candles before the price will push up from here again. The next one we have crude oil. A nice push down out of crude oil, even though we did not get any sort of signal here. This was the zone I've already sent to the members. I've been sending these zones to the members from couple of weeks, and finally the price hit the zone and fall from this area of value. A nice fall of $2 out of crude oil. So for crude oil, I'm expecting a double top, and we can even get a pullback from here and reject it from here. That is very likely. It can reject from here and form a double top pattern. That is what I'm looking at for crude oil. And or we can hit 50 EMA. That is very likely. It can go back to the previous level of resistance that has been broken and then form a good bullish signal. So we can get a possible pullback and a bullish signal out of crude oil, and I will enter long for crude oil until the price push up back to the previous high. So I will go long till this previous high. Once the price hit the previous high, I will exit my buy trade if I'm in the trade and start to look for my sell conditions only. So that is what I'm expecting for crude oil. Have these zones on the charts in case you missed this zone. Zone is 76.62 goes up to 78.93, from where we are going to enter another sell trade if the price pushes back up. I'm expecting a good fall till 50 EMA, then a good push up. So have these zones on the charts. Once you have the zones there and conditions there, we are good to go long or short accordingly. The last one we have palladium. All you need to do, mark the zone above, which is 1313 goes up to 1358. Have these zones on your charts and just wait for the pullback. Once we have a pullback to this zone, I will start to look for my sell conditions with bearish engulfers or my double top entry confirmation. I can see a good buy signal here, so we can have a likely chance that price will push up at least 17 points from here, at least till 1285, where we need to exit or trade and look for the next action, what price action give us, and act accordingly. And this is the zone from where my buy trade with one of the entry conditions. So that is it for commodities, guys. If you have made it to the end, you are truly a legend. Mention in the comment section if you have made it to the end. Hope you are getting value out of my videos. If yes, hit a like button. It really helps me in the YouTube algorithm. Hit a subscribe button if you're new, so that we can join Money Markets family, so that we can all trade together and trade efficiently. Hope you trade green rest of the week. Have an awesome weekend. See you guys in the next video. Till then, take care.